Biggest pain with Castle data showing half of workers are still being remote. And my next guest expects this trend to continue next year, causing lenders to sell properties at steep discounts. Joining us for more in an exclusive interview is Don Peebles, billionaire real estate developer, CEO and chair of the Peebles Corp. Don, it's great to have you here, not least because your tone goes a bit against the tone of markets ever since the Fed meeting yesterday.
Yeah, I mean, look, I'm optimistic in the long run, but I think right now what's happened is, and interest rates aren't affecting this, it's how people work. People have changed how they work. They're working remotely. If you look at the best day in New York City is a 60% occupancy rate in office space, and that's on a Tuesday. That's the best yet. But overall, on an average, it's hovering around 50%.
I find Wednesday, personally, is the hardest to navigate out there on the roads. Are things so bad that you're a buyer yet?
Not as bad yet. What's happened right now is that equity and mezz debt has been wiped out. And now the properties are on their way back to the lenders. And the lenders, the senior lenders, are going to be in pretty decent shape because they never levered up. They did loans at a 60%, 65% loan to value. And so therefore, I think they'll be okay. And so they'll rush to sell these assets out. I think what's going to happen now, and we're seeing this more and more. Clarion just walked from a property in San Francisco the other day, gave it back to a lender. So you're going to see much more of that. And the lenders are going to begin to sell those assets. And that's going to happen in 2024. And throughout 2024, that'll be the commercial real estate story as more and more assets are given back to the lenders.
Don, how's your stuff?
Well, look, we are a development firm. So normally we develop and we sell, rarely hold. And so we're doing well. We see opportunities. We're now buying in the buying zone. I mean, we're an opportunistic company. And so we look for opportunities when the market's not functioning well. And so we're actually raising capital now for a new investment vehicle, which will be to buy commercial office buildings in the hardest hit cities that also are undersupplied in housing. And if you look at New York City, you look at San Francisco, you look at Los Angeles, they are all severely underserved in terms of housing. And so there's some conversion opportunities that we see as well. And I think also there's going to be a change in how people go to work. And it'll be more of a dispersed workforce. And so you'll have dispersed office and employment centers that will be where people want to live.
So you stayed away from this stuff in the crazy low cap years. That makes you smarter than most people out there on the street, because people were going crazy for this stuff, bidding down these cap rates to places where if there was a 1% interest rate, they didn't work, let alone 5%. So here's my question. What discount is enough for you? I remember when my mother was shopping in Mexico and the guy said $100 for the ring. She said $1. What are you saying?
I'm saying, look, I think first of all, I don't think I'm smarter. I was probably greedier. I just couldn't see how we could make a lot of money buying at 3%, 4% cap rates in a zero rate environment. So I think when we see office buildings drop 40%, 50% of what they sold for or what their values were, say in 2019, 2018, that's where we're looking. And we're looking for, but some buildings are permanently destroyed that will need to be demolished. And so we'll look at some of those, but our focus is going to be at those 50% discount areas. Land's going to go down significantly as well because there are not going to be as many alternative uses. And so we're beginning to buy land as well.
But is this conversion story a bit of a, I don't know what you call it, a Bubba Meister, so to speak? Everybody's talking about conversion. I got to think it's hugely capital intensive, hugely debt intensive, and the payoff may or may not be there.
Yeah, it's almost like fool's gold.
Right.
There's some buildings, and I would say if I were to, we're trying to figure this out in our company now, but I think we feel that about 20% of the commercial office inventory as a whole has potential to make a good conversion. And then a little less than that in terms of a very efficient and cost-effective conversion. And so it'll be a solution for some of these buildings, but many of these buildings will need to be demolished and rebuilt.
Right.
And so I don't think that is a panacea to solve the commercial real estate crisis that we're going to see next year.